I think most people, including you, don't know what will happen next with XRP. Now, I'm going to read some words from Tom Lee, who got it right. They were about tech stocks, and he said that the economy was expected to keep going strong even though the markets were uncertain. It's been a great week for the stock market, the crypto market, and everything else. I think a lot of you here today will find his research very useful. And he's going to share some more really important ideas about what's likely to happen next. We're going to go into a lot of detail about it to make sure you understand how Tom Lee and I are using it and what a lot of other people are doing right now to make sure. Before you watch, please read the warnings and click like so everyone can see it. Now, let's hear what Tom Lee has to say. But first, Tom Lee, what did you see that other people don't? I thought we were going to zero. Plus, Brian is zero is always a possibility. But I think it comes down to three things. The first is experts were worried about the economy, but the high yield market never supported those worries. Spreads on high yield bonds did get wider, reaching about 439 basis points during a slump. On the other hand, they'd go up to about 700 basis points and then drop back to around 360. The second thing is that, as you say, the stock market did have a liquidation event, but all waterfall drops, 17 of 18 since 1950, had a V-shaped recovery. We knew the bottom would be in the shape of a V when it was set. The only time it was really different was in 2022 when Jackson Hole happened. We had a lot of faith in companies. You should know that these companies have been through a lot. They made it through a flu shutdown and a recovery that caused a whip. Since businesses made it through the fastest rate hikes ever, I think they should be praised. Their earnings and estimates are much better than we thought they would be, even for the first quarter. That's why we told our clients to sort of buckle down and even get more publicity, which I deleted in a tweet around that time. I told them, you won't really lose money until you sell. This is something I don't normally do. I really meant it, and I had to say it again. I was talking about this show on another network that said seniors are leaving, and someone took my angry tweet or post and used it to commit suicide. In the fashion world, you shouldn't try to time the market unless you're leaving in a few months or your ads or something. It's better to be in the market for a long time, right? That's one thing if you're a trader or a hedge fund. But if you're an investor with a longer term view, it's clear that the trend is up, but we think that the sell-off is overdone. Do you agree? Yes, I do. There are a few things going on. We talked about it during the tariff disruption, but we already knew that more than 60% of skilled stock investors lean Democratic. This meant that they had a half-filled picture of what the White House was doing, which is why the move in stocks was bigger than the move in bonds. In the world of fixed income, 60% of people who deal with bonds are registered Republicans. That's why I think what the bond market did gives you a better warning, at least in this case. The second is the 10 best days, which has been talked about a lot. We pointed out several times that the S&P only returned 3% a year in 2023, and as you say, you need to stay in the market during the 10 best days of those years in order to get the 20% gains. Also, many people sold shares when the price was $48.55, and now they're buying them back. That means they missed a gain of 1,000 points or 20% by 2025. Have you thought about what kinds of bonds would pay the, following up on what we were talking about, what do you say now to those who missed it and wish they had gotten in at the lows a month ago when no one wants to go? Oh, okay, now that stocks are back at all-time highs, I'm going to make my move, but we might go down again. So here are some general tips. You know what? I have some advice. Right now, the 10-year return is 4%, which I don't think is a big deal for businesses or the government. That's why I think it's a good amount of money for businesses to make a profit, and there's a lot to be happy about. In 2026, we'll have less control over trade because the trade mess will be over. And if we get tax cuts, we might be able to trade more freely. U.S. businesses would make more money if they could trade with other countries. So far this year, the market has been flat since May. No one should feel like they missed anything. They might be able to buy a lot of businesses. I think a lot of stocks went down in value, but I still see opportunities in names that have been written off. We talk to our clients about this, whether it's the Mag 7 or Tesla. Yes, there are still a lot of chances in small caps. Tom Lee made some great points, and the way he talked about them really hit home for me. Most price changes in the stock market and cryptocurrency market happen within 20 days. If you try to time the market too closely, you might miss out on those opportunities. For this reason, I think it is very important to hold on to your money. People have been holding on to XRP cryptocurrency for a long time, especially now that it's clear that the US economy is getting stronger. The crypto market is doing really well, and there are a lot of stocks out there. We can see that Donald Trump is putting more pressure on Jerome Powell because he won't cut interest rates because he says it's not fair to the. Trump seems to be making his point. China and Europe are already doing what they need to do. What's taking so long? What's the point of staying here? There are a lot of different opinions on why that is the case. I'd like to hear what you all think in the comments. In the end, though, I think we can all agree that rates need to go down. It's a good day for the stock market, and we're ready for the bull market to begin. After this, Trump says the stock market will go even higher, which I find very interesting since it's already gone up a lot. But there's something very strange going on here. From Koshi forecast markets, as we can see, since the U.S.-China trade deal, prediction markets now only expect 2 interest rate cuts in 2025 instead of the 3 that were expected before. This is strange. I'm not sure why the prediction markets have changed their minds, but I think that Jerome Powell's recent comments at FedList and in other speeches have a lot to do with it. Powell has said that he's not in a hurry to cut rates. He's been saying this in other places for about 3 or 4 months now. Taking that into account, I think it's already 5 months into the year, and we only have about 7 months left, or 6.5 months. How long does he really have to lower rates for us to reach the number of rate cuts that many people thought he would need to reach, which was about 5? Back-to-back 2 or 3 months in a row? I think that's crazy. Also, what's going on between the U.S. and China is very interesting. For example, Trump has changed his mind about China a lot from fuck China, we will not do business with China. Instead, we will do business with India, which